Hello everyone, good morning to you. I hope you're all doing well. Let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, I will be glad that you type in hi in the comment section, please, so that we can get this session started. Okay, I would like to see some feedbacks in the comment section, please. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section. So let's get this started. Okay, Zara Ham, good morning, thank you. 442, good morning to you. Is it okay? Zosni, all right, good morning, thank you. Redo, good morning. Ameloro, okay, good morning, thank you. Tonil, good morning. 1860, good morning to you. Hey Carrie, good morning, thank you very much for that confirmation. 983, thank you. Well, this is a positive feedback that we are good to go this morning, and I'm so excited to welcome you to another promising session on the Extreme Speed. My name is Sharif Daramola, and for the next 1 hour we shall be embarking on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you're all welcome and thank you for being around. And if you're yet to understand how this works, well, what we simply do here is gather here every morning in anticipation of the New York session to prepare our expectations for the New York, how we want to be trading the pairs that we have been monitoring since the beginning of the week. And I will implore that you stay tuned in through to the end of the session so that you can get to understand how this works. And I promise you, with time, you'll get to understand and be able to take your independent and individual decisions using the information we shall be sharing during the live session. And once again, you're welcome all. And so let's dive into the chat and see what is really going on in the market. Well, before we go into the chart, as usual, we will definitely be looking at the economic calendar. And from the look of things, we really do not have any macroeconomic event related to any pair we have been monitoring since the beginning of the week. So we don't have a high impact event, so we shall be leaning on our technical skills, trying to understand the psychology of price movement currently in the market, and using whatever market structure we are able to identify to make a decision for today. So with that being said, let's dive into the chart right now. And the first commodity we are going to be looking at, as usual, is the US oil. So right here we have a situation here on the US oil where price action has been within a consolidation phase since the beginning of the week. And what was our expectation during the live session? So let's quickly run through the replay of what our expectations were during the live session yesterday. Well, during the live session yesterday, we were around this area here. I think, okay, we had the sell position running where I told you that we shall be moving our stop loss to lock in some profits after taking advantage of the breakdown of the $79 level here. Remember, at the beginning of the week, we were able to identify a channel between the $79.50 level and the $79 area, where a breakout will be giving us an opportunity to buy, and a breakdown of the channel will give us an opportunity to sell. And in fact, we had a buy position triggered here on Monday, which gave us about price action moved about 130 pips in our favor before we saw price drop back into the channel that price action started at the beginning of the week, which is between the $79.50 and the $79 level. And prior to the live session yesterday, we had an opportunity to join a sell position after price action broke down, retest the $79 level to further emphasize the strength of the sellers at that particular point in time. And one thing we said during the live session yesterday was to move our stop loss accordingly to lock in some profit, after which we want to be monitoring how participants in this market will be reacting to the $78 level to decide what our next line of action will be. And in fact, we were looking forward to hold on a second, please. I want to okay, sorry for the breaking transmission. So we are back in right now. So we said we are going to be looking forward to see how price action will be reacting to the $78 level to decide if we are going to be if we are going to be selling if we do have a breakdown of that structure. And I can remember vividly after noticing the buy pressure we were seeing here during the live session yesterday, we scaled down to the much lower time frame where we saw a reversal pattern around the $78 level. So we identified the neckline area at the $78.20 level, where we said we should be having a position triggered at that point. So we had a position triggered before the end of the live session yesterday. That was very interesting as price action moved about how many pips? That was about 75 pips in our direction before we saw the sell position, sell momentum that began right around the $79 level to take us out of that position. And we saw a situation yesterday where price action did a little breakdown of the $78 level, and I'm very sure you must have sold at that point, and I hope you moved your stop loss accordingly to lock in some profit as we were taking out of that current position at break even. And if we look at what has been happening here in the last 18 hours, we can see a situation where a bullish momentum finally came in here, turning this breakdown to be a false one, at least in the meantime, to signal that we might likely be seeing a bullish momentum anytime soon. And to buttress the fact that we might likely be seeing a bullish momentum anytime soon is the fact that price action broke out of this bearish trend line. Remember, this trend line has been holding selling pressure since the beginning of the week, and if we connect the series of lower highs here, we can see that we have a resultant bearish trend line. And in fact, during the later part of last week's trading session, price action broke out of the trend line, broke above the $78.20 level to push price to the upside, and that moved about how many pips from that level? Moved about 150 pips in that direction before we started seeing another wave of selling momentum at this point. So with the current structure we have here, it is very, very important that we remain patient to see how price action will be reacting to this current market structure. As we can see, we have a sell pressure that has finally broken down that channel which we identified at the beginning of the week. So with the breakdown of the $79 level here, remember, which is the support level for the channel we identified at the beginning of the week, I'm of the opinion that we should wait out and see how far this retracement phase is going to go. And to further understand the current structure here, most importantly the $78 level, which has been a strong buying niche since the beginning of this week, I would want us to scale up a little into the daily time frame to see how important the $78 level is, after which we shall be coming back down into the lower time frame to decide what our next line of action will be. So scaling up a little bit into the daily time frame, what are we going to be seeing here? So at the beginning of the week, we identified a trend line after noticing that price action has been finding lower highs in the last 7 to 8 months, and as a result of this we were able to connect the series of lower highs here, which has given us this resultant bearish trend line to further emphasize the strength of the sellers in this market. Now, if we zoom into what has been happening here in the last 3 to 4 months, there is another structure here which has been very peculiar with this current structure, and that is the $80 level, which has been a significant key structure. And in fact, we have been using the structure to guide trading activity in the last 4 months. And if you look at what happened here in the month of November, as soon as price got into the $80 level, we saw selling pressure resume from that structure. The same thing also happened here during the first week of the month of December. We saw as soon as price came into that structure as well, we saw selling pressure resume from that area to further emphasize the strength of the sellers at this particular point. Now, later on in the month of December, we saw a situation where last year, 2022, closed around the $80 level as buyers were unable to break out of that structure through to the end of last year. And the new year began on a bearish note as we saw an engulfing bearish candle right from that $80 level again to emphasize that sellers are still very strong at that particular point. And fast forward to like 2 weeks ago, we saw a situation where the rejection of the $82.50 level by the sellers allowed a resumption of selling pressure again around the $80 level. And last week trading session also closed around the $80 level here, and the week has also started on a bearish note. As you can see, price has continued to trade below the $80 level to further emphasize the strength of the sellers at this particular point in time. And with the look of things right now, judging from the current information we have gathered so far here, it's more reasonable to continue to look out for selling opportunity as long as price remain below the $80 level. And talking about the $78 level, I showed you on the 1 hour time frame, and I told you I would like to show you how important the $80 level is with the current structure we had on the 1 hour time frame. Now, if we go to as far back as the second week of the month of January, we can see that price action was initially caught within a flat channel between the $82.50 level, where that was serving as the resistance point of the channel, and then the $78 level here, which was serving as the support level of that channel. And then a couple of weeks ago, we saw the breakdown of the $78 level. And from a technical standpoint, whenever we cite a breakdown of a structure like this, there is a possibility that price action is likely going to come back, do a retest of that structure to incite another wave of bearish momentum. But what we saw here during the course of last week trading session, we saw some attempt by the sellers to retest that structure before we saw this engulfing candle taking price right out of that structure. But the engulfing candle was unable to break out the $80 level. Remember how strong we said the $80 level has been for selling pressure in the last 3 to 4 months. And this has resulted into continued selling pressure below that structure, and price action is right back at the $78 level. And at this point, you would agree with me that we are at a critical point in this market where we need to really understand what is really going on around the $78 area here to decide what our next line of action will be. So if we look at the current structure here and try to simulate what could actually happen during the New York session today, and taking into consideration that the rejection of the $80 level is a lower high compared to the previous structure, we have a high here and we have a lower high here, it's obvious that sellers are still very, very strong in this market. So now we want to see how price action will be reacting to the $78 level probably in the next couple of hours, as if price action do break down the $78 level right on our lower time frame, with resumption of selling pressure below the structure on the same lower time frame, we shall be getting ready to join a sell position from this point. However, if this does not happen and instead we start seeing buy pressure again resume around the $78 level, as you can see here in the last 4 days, price action has been rejecting this level with some level of buying pressure here. As you can see with the nature of this week of these candles, you can see that there has been a sharp rejection of that level. So that is why we really need to understand how participants in this market will be reacting to that structure to decide our next line of action. So like I was saying, if buy pressure resumes again right above this level on our lower time frame, then we shall be zooming down to a much lower time frame to see if we are going to be having a setup that looks more like a reversal pattern around this area to incite another wave of bullish momentum. So we shall be looking forward to breakout retest on our lower time frame to join that potential rally. And if this leads into a further breakdown of the breakout of the $80 level, then this will be a beautiful confirmation that is very good for us to be buying the US oil. So at this point, we are going to remain patient here. So for those who are still in the sell position on the US oil here, that is if you had sold right below the $80 level, so at this point in time, I will be advising you to secure your current position by moving your stop loss accordingly to lock in some profit while we wait out and see how price action will be reacting to the $78 level to decide what our next line of action will be. And like I told you, if we start seeing sudden pressure below the structure on our lower time frame, we would have no choice but to join a sell position there. So scaling back down to the 1 hour time frame, let's see how this level has been respected or reacted to in the last 24 hours. So when we scale down to the 1 hour time frame, what can we see here on the 1 hour time frame? So this is the 1 hour time frame. We are back right at the 1 hour time frame, and obviously we can see where the $78 level has been. It's around this area, which has been a strong buy zone since the beginning of this week. You can see that every attempt by the sellers to break down the structure since on Tuesday, we have been seeing rejection from this level by the buyers. The same thing also happened here on Wednesday. That was during the live session yesterday. We saw the situation where we saw resumption of another buy pressure from that level, and the same thing has also happened here during the later part of the New York session yesterday. So at this point, we need to be very careful and look out to see how price action will be reacting to the $78 level to decide what our next line of action will be. So for me on this one, I will be suggesting that if price action does break down the $78 level, we shall be looking out for selling opportunities below the structure. And then if we start seeing multiple rejection of that area, then we will be welcome to add more position to our sell trade. Now, talking about buying this US oil, if we are going to be taking into consideration the buy pressure we have been witnessing here in the last 72 hours around the $78 level, and considering the impulsive move here that started during the New York session yesterday, let's see what we can be looking out for. And considering also the fact that price action broke out that bearish trend line that has been guiding bullish bearish momentum since the beginning of the week, we cannot ignore the possibilities that buyers might likely come in at this particular point in time. So if we are going to be anticipating any buy pressure here, that is if price action does not break down the $78 level at any point in time, but instead we start seeing buy pressure right above the $78.20 level, then we might be getting ready to join another wave of bullish momentum. So how do we position ourselves in such a way that we can catch that bullish momentum if it's really going to be happening at this current structure? Well, the first thing we are going to be doing here is to take into consideration this bullish impulsive move to the upside here, which culminated at around the $79.75 level, using our Fibonacci retracement tool, and hope that the bearish momentum we have been witnessing here in the last 3 hours is probably a retracement phase. And if we are going to be doing that, we shall be aiming at an area between the 50 and the 78.6% of our previous impulse leg, which we just identified here as an area to look out for buying opportunity. So for the sake of clarity here, I would like to label this area a potential buy zone. That is, if we start seeing reversal patterns around that area, then we might likely be getting ready to join a bullish momentum there. So I would like to give this a bigger font. Let's give it 11, and then we give the color a yellow color here. So this is what we have now. So we have a demand zone right now that we might likely be looking out for buying pressure. If we see something like a reversal pattern, it could be a double bottom structure, something like this, to join a trend continuation to the upside, and it could likely be a head and shoulder pattern, something like this, breakout retest of the neckline, then we could be joining a bullish momentum from that area. So the most important thing right now is to try to see how price action will be reacting with the zone, which is simply between the $78.60 level and the $78 area. And you know the $78 level has been a major buying niche in this market since the beginning of the week. So it's a very good confluence for us to look out for buying opportunity at this particular point in time. So the next thing we are going to be doing right now is to scale down to a much lower time frame. Let's see if we can cite any possible reversal structure around this area now to join a bullish momentum. So in that regard, I will be scaling down to the 15 minutes time frame. So let's see what we have here on the 15 minutes time frame. So we really don't have much here on the 15 minutes time frame, as there's still a possibility that price action could still drop to break down the $78 level. So like I told you earlier on, we shall be waiting out to see something like a reversal pattern around this area to join a bullish momentum from this point. But if that does not happen and instead price action drops below the $78 level with selling pressure below the structure, then we'll have no choice than to anticipate a selling opportunity on the US oil. So this is my view here on the US oil. I hope I made myself clear, and I tried as much as possible to simulate all the possible scenarios that we should prepare ourselves against the New York session today. But if you do have any questions, feel free to drop your inquiries in the comment section, and I assure you that I will be checking the comment section from time to time to see if there are any questions for me. So with that being said, here I will be diving right into the next option, which is the US tech, and let's see what we have on the US tech. So on the US tech yesterday, we had some expectations here on the US tech after citing some a channel. Remember, we identified a channel here which existed for I think 48 hours here, that was between the 12,520 and the 12,470 area. We saw our price action fell into a consolidation phase to further emphasize the indecision in this market. Don't forget that we are profitable on the US tech prior to the live session yesterday. Remember, we took advantage of a buy opportunity after we saw the breakout retest of the 12,320, and since then price action had continued to find higher highs and higher lows to emphasize the bullish momentum that the week has started with. And at this point in time, remember, during the live session yesterday, we were around here. Where were we during the live session? Okay, we had a consolidation phase around the 12,520 level, and I told you that I am leaning towards a bullish momentum here. As we can see, price action is continuing to knock on the resistance level of that channel at the 12,520 level. Remember, that was our resistance point at the beginning of the week. That's the 12,520, and I told you to ignore all this move here, as I'm saying this as a noise. This was as a result of the volatility that came in prior to and after the macroeconomic events that happened on Tuesday. So because of this, we are not going to be taking this into consideration. So I said we should ignore that and use this channel as a yardstick for trading activity for New York session yesterday. And one thing I said is that we should have our buy stop order somewhere right above the 12,520 level to join a bullish momentum at that point. and this is exactly what happened. I think we got the position triggered even before the end of the live session yesterday, and we had this position running. And what do we have here right now? As if you had been part of that trade, kudos to you, congratulations to you guys, as you will currently be running with over 150 pips in profit at this point. And what we want to be doing right now, if you have been part of this journey, is to secure your current position by moving your stop loss accordingly to lock in some profit. And where do you think is most appropriate for us to lock in some profit? Well, if we look at the current structure we have here, the highest point price was on Tuesday was at the 12,650 level, which we have a resistance point here. Then we saw the breakout of that structure here during the later part of the New York session. So at this point in time, I will be suggesting that you should be bringing your stop loss to somewhere right below this 12,650 level. Lock in some profit there, and let's see how price action will play out in the next couple of hours. Now, if we look at the current structure we have here, following the impulsive move we enjoyed yesterday, that is the 100. How many pips move was that from the 12,520? That was about a whopping over 220 pips in our favor yesterday. And one thing we noticed here is that as soon as price got into the 12,750 level, we begin to see some sudden pressure from that area to give us a little consolidation phase around that area. So this structure here needs more attention, as we need to see how price action will be reacting to the structure to decide if we are going to be seeing a retracement of that impulse leg that happened yesterday. So to make things a little bit clearer for us, we are going to be identifying this channel, and if we look closely here, we can see we have a support level sitting somewhere right around the 12,000. Let's see, 12,685. Okay, so we should be having that figured out here. So for the sake of clarity, we should just relabel this $12,685 level. So we have something like this. So you can see what has been happening here in the last 12 to 15 hours. Now price action has been within the flat channel right within the 12,750 and the 12,685 level. And you know, in our community here, looking at it from a technical standpoint, whenever we have a flat channel like this, all we are going to be doing is to remain patient and look out for either a breakout of the 12,750 to join a trend continuation to the upside, or a breakdown of the 12,685 to see a sell-off happen in this market. But if a breakdown of the 12,685 happens, I would advise you to remain patient here, as this might likely be a retracement of that impulse leg that started yesterday, and this might likely lead into a situation where the retracement culminates somewhere around the bullish trend line here, which also shares a confluence with that 12,600 level, which was a resistance point earlier on in the week, and that was finally broken during the course of yesterday's trading session. So we might likely have a situation that if price action breaks down to 12,685, price might likely go as far as dropping into the bullish trend line, which also shares a confluence with the 12,600 level, in anticipation of another wave of bullish momentum to the upside. So we need to be very, very careful here. But if you are a scalper or a counter trend trader and you love taking short trades, well, you might be looking to take advantage of the breakdown retest of the 12,685, selling pressure below this level into this area, and then we look out for another buy opportunity. And if you are going to be doing that, let's see how many pips profit you have in potential. You have about 120 pips in profit to run through, if that is going to be the case. But remember, if you are not a counter trend trader, you are not a scalper, I would advise you to remain patient. Even if price action breaks down the structure, remain patient, as we have a bus stop here at the 12,600, which I said shares a confluence with that bullish trend line, where we likely have to be looking out for buying opportunity, which could come in the form of a reversal pattern from here to join a bullish momentum to the upside. So these are my views here on the US tech for buying the US tech if price action drops below the 12,685. Now, if that does not happen, that is, if price action does not drop below the 12,685, but instead we see a situation where price continue to find higher highs and higher lows here, then I would like us to position ourselves right around or above the 12,750 to look out for a breakout to join a trend continuation to the upside. So it's a very simple setup we have here on our time frame. So we really do not have to scale up into the daily time frame to see what is really going on here, as it's very obvious what has been happening here since the beginning of the week, as price action has been finding higher highs to further emphasize that buyers are still very strong in this market. So it's not advisable for us to be thinking of selling at this point, but if you are a counter trend trader, like I said, you might want to take advantage of a breakdown retest of the structure to the downside in anticipation of that trend continuation to the upside. So these are my views here on the US tech, and I hope you are able to munch my screen so that you can use it as a reference point when you're about to make your individual decision during the New York session today. And if you do have any questions you feel like asking regarding what I just explained so far, or there is an area you need me to shed more light on, feel free to drop your inquiries in the comment section and I will be willing to be of help. Before I move on to the next pair, let me read through the comment section and see what we have there before we move on. So the comment section here, I can see okay, Smoochie, good morning to you. All right, I can see 1121, how are you? Okay, 2260, hello. All right, hope you're doing well. Good morning to you, thanks for checking in. 8603, good morning to you. 799, I can see Bali, all right, I hope I pronounced that correctly. Valeric, all right. 688, okay. 672, good morning to you all. 8603 952, good morning. All right, so in the absence of no questions, I want to be assuming that we're on the same page here, so I'm good to go on to the next pair. So the next pair we shall be looking at this morning is the USDJPY. And on the USDJPY, we have been quite profitable here, at least. Remember, we had the position running since last week's trading session when we took advantage of the breakout of the 131.00 level here. And since then, price action has been climbing higher highs, finding higher highs and higher lows to further emphasize the strength of the buyers in this market. And at the beginning of the week, we were able to add more position to our existing trade after price action broke out of that consolidation phase that gripped the markets throughout the course of last week's trading session. That was around the 131.650 level, which was serving as a resistance point throughout the course of last week's consolidation phase, and the 130.500 level, which was serving as a support level for the channel. So at the beginning of this week, we saw that price action started with a bullish note right above the 131.400, breaking out of the 131.650 level, the resistant level of that channel we identified last week, to continue to find higher highs. And we were able to join by hard buying right above the 131.800, had position here on Tuesday, and then we had another position at the breakout of the 132.900 level. And then yesterday's trading session, I told you that we shall be looking forward to see, that is for those who had missed out on all of the opportunities we took advantage of at the beginning of the week, that we should be looking forward to where was that? Okay, another breakout of the 133.500 level to add more position. And in fact, we had the breakout of that level, and price action moved about 90 pips in that direction before we started seeing the sell pressure that gripped the market in the last 24 hours. So right now, for those who had been part of this profitable journey since the beginning of the week, kudos to you. Well done, guys. The next thing we want to be doing right now is to secure the current position. And for me at this point, I will be advising us to secure the current position at the entry point that we took advantage of the buy position here during the New York session yesterday. So what I'm simply saying here is that we should allow our stop loss to be somewhere right below the 133.5 133.500 level, where we give some room for price action to breathe in anticipation of a possible potential trend continuation to the upside. And another thing I would like us to put in mind while we continue to monitor price action for the week is the fact that we have been witnessing a bullish momentum here since the later part of last week's trading session. And to further emphasize the importance of the strength of the buyers in this market, we were able to connect the series of higher lows here, which has given us this bullish trend line that you can see on your screen. So in the last 4 to 5 days now, price has consistently and uniformly respected this bullish trend line to continue to find higher highs. And now with the situation of things happening here in the last 24 hours, after seeing that price action got into the 134.00 level, we have been witnessing selling pressure, which has led to the breakdown of the 133.950 level. So at this point in time, price is currently trading below the 133.950, and we shouldn't be in a hurry to leave our buy position here. As you can see, price is still trading above the bullish trend line, and there is still a possibility that price action might likely drop back into the 133.500 level, which also shares a beautiful confluence with that bullish trend line that we identified there to incite another buy pressure, to incite another wave of bullish momentum. So these are the things we are going to be looking forward to going into the New York session today. Now there's another thing I would like to call our attention here since the beginning of I think today's trading session. Since the beginning of today's trading session, we have been noticing buy pressure around the 133.700 level. As you can see, every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. The same thing also happened here in the last 3 to 4 hours. We've been seeing buy pressure from that level. And one thing this thing is showing me here, if we take into consideration this impulsive move that rejected the 134.00 level, we can see the first touch here at the 133.630. Price action came back into the 133.950. We saw another touch. Price was unable to break the previous structure, and it appears price is going back into the 133.950. and if you look at this closely, it's looking more like a reversal pattern in the form of a double bottom structure. And you know, from a technical standpoint, whenever we identify a double bottom structure like this, the next thing we want to be doing is to identify a neckline of that structure, which we shall be using as a guide for trading opportunity. And coincidentally, we have the neckline falling right around the 133.950 level, and for this reversal pattern here to be mature, we want to see a breakout retest of the 133.950 level to give us an opportunity to add more position to our existing trade. And if this leads to a further breakout of the 134.00 level, we shall be adding another position here to join the potential rally to the upside. So I hope that we'll be on standby to catch all of these opportunities that I've explained here, and don't allow us to miss any of these as we continue to monitor price action. Now there is a caveat to this current structure here, and that has to do with the bullish trend line that shares a confluence with the 133.500. Now, in as much as we continue to look out for buying opportunity here, there is a tendency that price action might break down the 133.500, breaking down that bullish trend line to incite a sell-off in this market. I doubt that is going to happen during the New York session today, but if it does happen, we want to be prepared to take advantage of that opportunity. So if we do see a breakdown of either both of the 133.500 and the bullish trend line, then it will be a sign that the bullish trend line may no longer have the capacity to continue to hold that bullish momentum. And if this happens, followed by selling pressure below the structure, then we'll have no choice than to join a decline to the downside. So I hope that we put this into consideration while we plan our trade for today. But sincerely speaking, I doubt if this is going to be happening. But if it does happen, let's also be prepared to be able to join that move to the downside. Now, there's another thing I would like us to put into consideration while while trading the USDJPY for today. And looking at after price rejected the 134.00 level, we can see we've been witnessing some lower highs here. So I would like us to connect a series of lower highs here to give us that bearish trend line, and this trend line will also guide us just in case price action breaks down the 133.500 level. If it does come back to do a retest of either the bullish trend line or the bearish trend line here, which shares a confluence with the 133.500 level, then we'll likely be seeing an opportunity to join that decline to the downside. And this also helps us to guide our buying opportunity if price action does break out of the 133.950 level, followed by buying pressure around the structure. Then we join the rally to the upside. Or if you are already in this trade, it will be a very beautiful opportunity to add more position to our existing trade. And don't forget that if price action breaks out of the 134.00 level, it will also be another opportunity to add more position to our existing trade. So that is that on the USDJPY for today. If you have any questions, feel free to drop your enquiries in the comment section. So I hope you munch my screen so that you can use it as a reference point when you are about to make your individual decisions for today. Now moving on to the next pair right now. So the next pair we are going to be looking at this morning is the USDCHF, which was introduced to us by Steamroller. Have I seen Steamroller today at all? I don't think so. I haven't seen him today at all. Okay, I hope you're fine, Steamroller, and how's work? So we are treating the USDCHF right now, and the USDCHF has been a little bit choppy since the beginning of the week. Remember yesterday where were we during the live session yesterday? So during the live session yesterday, we saw the situation here where price action dropped. Prior to the live session, we took advantage of this buy position at the breakout of the 0.92150 level here, and we saw how as soon as price got into the 0.92400 level, we saw some selling pressure around that area, which negated all buying attempt to push price to the downside. And as a result of this, we were taken out of that position here at break even. And for those who are smart enough to have taken advantage of this one right above the 0.92150, well done to you for being on standby to catch that move. And for those who are not joined, I told you actually that we are going to be looking out for an opportunity at the breakout of the 0.92400 level. And one important thing about the 0.92400 level is the fact that it shares a beautiful confluence with that bearish trend line that we identified here. So if we look at what has been happening on the USDCHF since the beginning of the week, you would notice that price action has been bearish here, and as a result of this, if we connect a series of lower highs, we have this bearish trend line figured out. And looking at the bearish trend line and looking at the 0.92400 level, you can see that it shares a beautiful confluence with that structure. So we said if price action breaks out of that structure, we shall be looking forward to buying above that level. And in fact, price action did break out of that level, moved about 23 pips before we saw another wave of selling pressure taking us out of that position. And this has actually led to the breakdown of that bullish trend line. I hope you all remember the importance of that bullish trend line here. If you don't, or you are not part of the session prior to this one, let's quickly run through the 4 hours time frame to have an holistic view and see how important that bullish trend line is. Now, if we look at the 4 hours time frame here, what thing we observe here? All right, sorry for that breaking transmission, please. So what we see here on the 4 hours time frame is simple. Now, if we look at what has been happening on this chart since the beginning of this month, you will notice that there is something that looks like a bullish momentum here, as the first day of this month started from around the 0.90800 level, and since then price has been finding higher lows. but we are yet to see a higher high here. We have a higher low, and as a result of this, we have this bullish trend line figured out. Now we have the first breakdown of this bullish trend line here on Monday, giving us a clue that sellers are still very strong in this market, and coupled with this bearish trend line, then we had the second breakdown of this bullish trend line happen during the early hours of today. So this is a beautiful sign that we might be seeing a sell momentum anytime soon. And if we take this whole consolidation phase into perspective here, it's important that at this point in the market, we need to be very, very careful and remain patient to see how price action will be reacting to the structure to decide what our next line of action will be. And don't forget that we have identified a buy zone around the 0.91600, which has been a strong buying niche here since Thursday of last week. We saw that every attempt by the sellers to break down the 0.91600 level has been met with strong resistance from the buyers. And as a result of this, we need to be very, very patient here. And one thing I stated here yesterday is that the 0.92150 level will continue to guide our trading activity. Now, how do we intend to use the 0.92150 to sell the USDCHF? Well, I want us to see price break down the structure, followed by selling pressure around below this level for us to join that decline to the downside. And if a further breakdown of the 0.91600 level, in fact, I'll be very, very glad to add significant position to my sell position here, as the breakdown of the 0.91600 would have taken out all the buy positions here, gaining some liquidities for the sellers, which will be reflected on the chart as selling pressure right below the 0.91600 to join that decline to the downside. So this is the only scenario I will be looking forward to sell the USDCHF. While the 0.92400 level will continue to be an area we shall be looking out for buying opportunity to join the rally to the upside. So if buy pressure resumes around the 0.92150 level here, something like this on our lower time frame, we start seeing that sellers are unable to break through the 0.92150. This will be a beautiful sign that we are likely going to be seeing a bullish momentum. And if this leads to a breakout of the 0.92400 level, it will be a beautiful opportunity for us to join the rally to the upside. And remember, we do have a structure around the 0.9200 level, where I said a further breakout of that structure will be a very beautiful opportunity to add more position, as a breakout of the 0.92900 level would have taken out all the sell position around here to gain some liquidity for the buyers to push price further to the upside. So these are my views here on the USDCHF. If you do have any questions, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the last pair for today. Okay, Bruja. Okay, we see your comments, Bruja. All right. So in the absence of no questions, I want to assume we're on the same page here. So if we do on the same page, and remember to smudge my screen, this will help you to be able to use it as a reference point when you're about to make your individual decision during the New York session. So with that being said, let's move on to the last pair for today. And the last pair we are going to be treating for today is the XAUUSD. And on the XAUUSD, we have been quite profitable here since the beginning of the week. Remember, let's quickly run through what our expectation was and how the week has started for us here in this community. Now, at the beginning of the week, we have seen a situation where price was initially caught within a channel, right within the 1,865 level, which was serving as our resistance point for this week. And then we had a support level for this week sitting around the $1,857.50 zone. Now, you know, from a technical standpoint, whenever we have a flat channel like this, we are going to be patient to look out for trading opportunities at either a breakout of this of the resistance level of the channel or a breakdown of the support level of that channel. And in addition to this channel we identified at the beginning of the week was a pennant structure. After connecting the series of lower highs here, we had the trend line, bearish trend line for the pennant, and then we also connected a higher lows here, which gave out the support level for that pennant. Now, this old channel here shares a beautiful confluence with our flat channel we saw here, and this was very interesting for us, as we were able to see the market was able to give us a signal in the form of a breakdown of both the support level of the flat channel and the support line of the pennant structure we identified here. And as you can see here, price action broke down the pennant, came back to do a retest of the support line of that channel to emphasize the strength of the sellers at this point. And this was followed by multiple rejection of the 1,865, which was serving as the resistance for this week. And as you can see, price had continued to find lower lows and lower highs in this regard. So we had our first position at the 1,860 here. We had a second position right below the 1,857.50 level, and we had the third position around the 1,854. And with the situation we have here, price had continued to find drop further to the downside, giving us quite a lot of profits here. As you can see, the first position is currently running with about 2,200 pips in profit. The second position is running with about 2,000 pips in profit, and the third position here is running with about 1,600 pips in profit. So we are quite profitable on the XAUUSD. Now that we are going into the New York session today, what is going to be our plan? Well, if we look at the current structure here, you would notice that since price has tested this area around the 1,830 level in the last 36 hours here, you have seen that price action has been choppy throughout the last 36 hours. As you can see, we have a consolidation phase around here after the test of the 1,830 level, and this has led into a situation where we can say that participants in this market are very indecisive at this point, as we are not sure where price will likely be going at this point. Now, as we head into the New York session, how do we intend to position ourselves in such a way that we can catch any opportunities that finally happens here? Well, the first thing I did here is to zoom in and see how price action had played out since the beginning of the week, and it is very obvious that price action has been bearish, and as a result of this, I was able to connect the series of lower highs here, which has given us this bearish trend line that you can see on your screen right now. So going into the New York session today, we shall definitely going to be using this bearish trend line as a guide for trading opportunity. Now, in addition to that bearish trend line, here is this support trend line, which is bullish here. As you can see, price has been finding higher lows, but still has not been able to break out of that bearish trend line. So we are going to be using this bullish trend line here, which I will be calling a temporary bullish trend line in the meantime, to also guide our trading activity. And one thing about that bullish trend line is the fact that it shares a beautiful confluence with the $1,837 level, which has been a resistance point at one point before we saw the breakout retest of this level. And if we cite a breakout retest, it's very obvious that we might likely be having a bullish momentum. But one thing that negates the idea of any bullish momentum here is the fact that the bearish trend line has continued to resist all attempt by the buyers to break out of that level. And if this kind of scenario continues, then a breakdown of the 1837 level would be a beautiful opportunity for us to join or add more position to our existing trade. Now, if this goes on like this, leading to a further breakdown of the 1830 level, then this is another opportunity to add more position to the existing trade as well. So the current structure here has a tendency of giving us multiple entries on the XAUUSD, and I just hope that we be on standby to catch these opportunities when they finally happen. Now, in addition to this current structure here, I would like to state here that what do we do if price action does break out that bearish trend line here during the New York session today? Well, if price action breaks out of that bearish trend line here, I would likely see this as a counter trend opportunity, which might be a retracement of the previous impulse leg that we hold on a second, let me draw this out. So it might be a retracement of this impulsive move, which might see a situation where price will retrace back into somewhere right around the 1850 or the 1854 level, or in fact go as far as the 1857 level, where we'll be looking out for certain pressure around this area to join another wave of bearish momentum. So if a breakout of the bearish trend line happens, that is, if price action breaks out of this trend line, then we want to see something like this. Buy pressure above this level, then we could actually join that counter trend opportunity to the upside, with the hopes that we will be seeing some selling pressure around this area to join the trend continuation to the downside. Now, a warning here for you, for those who don't know, who are not keen on taking counter trend opportunities, or you are not comfortable taking counter trend opportunities, or you are not at all a scalper at all, well, I would advise you to remain patient. Even if we do have a breakout of this trend line, I would advise you to remain patient and wait at this bus stop right around the 1854 and the 1850 level to look out for selling opportunities there. So all we want to be seeing if price action breaks out is something like a sell pressure. It could evolve into a double top structure, inverse head and shoulder pattern, and a reversal pattern you can think of. If it comes in here, breakdown retest of structure on our lower time frame, this will be inciting a bearish momentum here. So these are my views here on the XAUUSD. I hope I was able to simulate all the possible scenarios here. So for those scalpers that would like to take a counter trend opportunity here, as soon as price breaks out of the structure and continues to move in our favor, ensure that you move your stop loss accordingly to secure your current position. Remember, we are in a bearish momentum here, and price action has been bearish since the beginning of the week, and there is a likelihood that we could see sudden pullback that is highly going to be happening during this market. So please put that in mind while we continue to monitor price action. If you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be taking my time to read through to see if there are any questions for me. So since this is going to be the last pair we are going to be looking at today, and before I drop the curtain for today, let's quickly run through what we talked about today, and this is for those who are not part of the beginning of the session, so that you can at least have a better perspective into what we talked about today. So the first commodity we looked at today is the US oil, and on the US oil we are in a situation, buy pressures resumed here, and I hope you had your position triggered. Let's quickly run through the 5 minutes time frame and see what we have. Beautiful. So we had a reversal pattern here finally, as we saw the situation where price evolved into something that looks like a head and shoulder pattern, break out of that structure to incite that move. So we already have a buy position triggered here from the buy zone around this area, and to make things a little bit easy for us to be able to visualize visualize how to further take advantage of this opportunity, we should be having a neckline sitting around the $78.60 level here. So what we am saying here is, if you had missed out on that opportunity, then I will be advising you to remain patient and wait out to see if price action will be coming back to do a retest of that level. So if it does come back to do a retest of that level and we start seeing buy pressure around that area, it will be a very beautiful opportunity to join that rally to the upside. And that is what we have here. So for those who are taking advantage of that move there, kudos to you for being on standby to catch that move. Then we continue to look out for more opportunities at the breakout of the $79 level, breakout of the $79.50 level, and in fact, if it continues to the upside, breaking out of the $80 level, we shall be keen to add more positions to our existing trade. So once again, well done to those who have taken advantage of this opportunity. Now moving on, we talked about the US tech, and on the US tech as well, we are in a profitable position here since the beginning of the week. Remember, we have been buying the US tech since the breakout of the 12,320 level, which happened here on Monday, and since then we have had positions, added positions here, had another position here, and going into the New York session today, we were able to identify a flat channel after price action tested the 12,750 level. Then we had a support level of the channel sitting around the 12,685, and one thing we said here is that we need to be very patient to look out for signals to join the trend continuation to the upside. And with the look of things here, I told you that even if price action breaks down to 12,685, we should not panic, as there is a likelihood that price will still come back into the 12,600 level, which also shares a confluence with that bullish trend line that has been holding bullish momentum since the beginning of this week. So there is a likelihood that price might drop into that structure, evolve into a buy pressure structure like this on our lower time frame. Then we could actually join that trend continuation to the upside. And for those who are scalpers or counter trend trader, I told you that you might want to take advantage of the breakdown retest of the 12,685 with the hopes that price will get to as far as the 12,600 level, where your TP target will be. But if you are not a scalper and you're not comfortable taking counter trend opportunities, please stay out of that trade and wait at this bus stop here. Look out for reversal patterns that support a trend continuation to the upside, then you could join from that level. Now, like I said here, I said if price does not drop below the 12,685 but instead continue to find higher highs here, then we should be waiting at the bus stop around the 12,750 to join or add more position at the breakout of that level. So that is my view there on the US tech. I wish you best of luck on this one. Then we went on to talk about the USDJPY, and on the USDJPY we've been bullish since the beginning of the week, and we have a couple of positions running at this point in time. And I told you to secure your current position by moving your stop loss accordingly to somewhere right above the 133 or around the 133.500 level, while we give room for price action to breed in anticipation of another wave of bullish momentum. And I showed you something around the 133.700 level. As we can see, we have been witnessing buy pressure since the early hours of today around this area, and if we take into consideration this bearish impulse leg to the downside here, we have something that looks more like a reversal pattern in the form of a double bottom structure. And you know, whenever we identify such a structure like this, we need to have a neckline that we shall be using to serve as a yardstick for trading activity. And coincidentally, we have a neckline sitting around the 133.950 level, which has been a key determinant of price action, at least in the last 24 hours, where we said a breakout of that structure will be giving us an opportunity to add more position. And if a further breakout of the 134.00 level, we'll definitely be looking forward to adding another position to our existing trade. Now, there is one thing I also told you here about the bullish trend line here. Remember, we have this bullish trend line that has been supporting bullish momentum since the later part of last week's trading session. As you can see, price hasn't dropped below that level at any point in time. We shall be using that level 2 as a yardstick for trading activity. And one thing I said here is, even if price drops further to the downside, we should not panic, as we do have a bust up at the 133.500, where there is a likelihood that a bullish momentum could trigger from that area to incite another wave of bullish momentum. Now, there is a caveat to this current structure, and what I said here is, if it so happens that price action breaks down the 133.500 level, a level which also shares a confluence with that bullish trend line, then that will be a sign that that bullish trend line may no longer have the capacity to continue to hold bullish momentum. And if this happened, followed by selling pressure below the structure on our lower time frame, we will have no choice than to join that decline to the downside. So I hope we screenshot my screen here so that you can use it as a reference point to make your individual decision during the New York session today. Then we went on to talk about the USDCHF, which was introduced to us by Steamroller, and I still insist that we use the 0.9 to 150 level as a yardstick for trading activity. Now, when we looked at the 4 hours time frame here, we have a bullish trend line which has been supporting bullish momentum since the beginning of this month. And as you can see, if we connect the series of higher lows here, we had that structure figured out. And another thing we are also taking into consideration is the fact that price action has been bearish since the beginning of the week. As you can see, we have a bearish trend line after connecting the lower highs here. Now, buying the USDCHF, we already have a structure at the 0.9 to 400, where we said a breakout of that structure will be a beautiful opportunity for us to join a rally to the upside. And in fact, the importance of that 0.9 to 400 level is more strengthened with the fact that it shares a confluence with that bearish trend line. So if price action takes out all the sell position along this trend line, that bearish trend line breaking out of the 0.9 to 400 to at the same time, it will be an opportunity for us to join that rally to the upside. And like I said, if a further breakout of the 0.92900 level happens, we'll definitely be thinking of adding more position to our existing trade. Now, taking into consideration the bearish trend line here and the bullish trend line that has been respected since the beginning of the month, we can see that we had a couple of breakdown of that bullish trend line. One happened here on Monday. We saw the breakdown of that bullish trend line for the first time, and then we saw another one happen during the early hours of today. So with the situation we have here, we cannot ignore the possibility that the selling momentum that has been gathering here since the beginning of the week could finally break down to 0.9 to 150, and in fact go as far as breaking down the support level at the 0.91600. So one thing I said here is that we want to see price action break down to 0.9 to 150, retest of the structure, followed by selling pressure below this level on our lower time frame to look out for selling opportunities. And if a further breakdown of the 0.91600 level happened, this will be the first time it will have been doing that in the last 5, 6, 7 days. Now, if it does that, it will be a beautiful opportunity to add more position to the existing sell position that will be running at that point in time. So that is that on the USDCHF. I wish you best of luck on that. Then we went on to close the day with the XAUUSD, which is the gold. And on the XAUUSD, we have been very profitable on this commodity, as we currently running with over 6,000 pips in profit, as we had multiple entries on this one. And one thing we have noticed here in the last 18 hours is the fact that price action has been consolidating, hereby giving us a signal that there is an indecision in this market. And one thing we said here is that we shall remain patient to look out for trading opportunity from this current structure. And in order to guide our activities for today, we have identified a couple of structures, and one of the major ones is this bearish trend line. After connecting the series of lower highs here since the beginning of the week, it is very obvious that price action has been bearish for this week. And one thing I said here is that we might likely see a situation where price action will continue to the downside. And if we also take into consideration the higher lows here, which I used to identify this temporary bullish trend line, I said if it so happens that price action breaks down the bullish trend line here, which also shares a beautiful confluence with the 1837 level, it would be a good opportunity to add more position to our existing trade. Now, if this leads to a further breakdown of the 1830, that will also be welcoming additional position here. Now, on the XAUUSD, there is a caveat here which I emphasized, and that is the fact that if it so happens that price action breaks out of this bearish trend line to the upside, then I will be seeing this as a signal that probably the trend line may no longer have the capacity to hold bearish momentum, but we can't jump into such conclusion as we have a sell window here where there is a likelihood that price would break out, retest, come within the sell window, incite another wave of bearish momentum from that level. So even if price action breaks out of this trend line here, this will be seen as a counter trend opportunity. And if you are a scalper or a counter trend trader, you might want to take advantage of the breakout retest of the 1837, with your TP target sitting somewhere between the 1850 and the 1854. But if you are not a counter trend trader, you are not comfortable scalping, I would advise you to stay out of this one and wait for price action to come within this area. And one thing we want to be looking out for within the sell window area is a reversal pattern. It could be your double top structure, head and shoulder pattern, or whatever reversal pattern you can ever think of. Breakdown retest on our lower time frame, then this will be a beautiful opportunity to join that trend continuation to the downside. So these are my views here on the XAUUSD. I hope I made myself clear, and since I've not been seeing any question in the last couple of minutes on this one, I will assume that we are very on the same page. So thank you very much for your attention. I really appreciate every single one of you, and it has been a wonderful moment being around with you guys, and I wish you best of luck during the New York session today. And at the same time, I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week, and at the same time get ready for the New York session tomorrow. Once again, I wish you best of luck today, and do have a wonderful evening. Bye bye.